In this episode of Investors and Operators, I am sitting down with two very important guests, Charlie Maynard and Euan Rellie, the co-founders of BDA Partners, where I worked for over 6 years, gave me my start in the career. And Charlie, can you kind of start off at just the high level of BDA, and then we can rewind a little bit to the founding story, and then Euan can take it from there.
What is BDA today? BDA today is a financial advisory firm focused on Asia. You and I started back in 1996. We had the same idea back then, which was a financial advisory firm focused on Asia, particularly Asian M&A. And so we haven't been very imaginative in terms of getting off the case. We've been very, very focused on just that. Euan was actually working in Asian M&A when we started the firm, and he appreciated what Schroders were trying to do, and frankly, Americans and Europeans were much more focused ultimately on what they could do in America and Europe. And we thought that if we could just focus on Asia, we could really build a business. And that's what we've done for 24 years. So it's very simple.
What are kind of the facts and figures today? Like how many offices, how many people? Are there particular focus besides Asian M&A?
9 offices. So Tokyo, Seoul, Shanghai, Hong Kong, Ho Chi Minh, Singapore, Mumbai, London, New York. Over 100 bankers, about 80 to 85% sell side in any single year. 5 sectors, industrials including chemicals, consumer and retail, services, technology and healthcare. And control cross-border M&A is a key focus, but we have good domestic strength in each of those core markets of China, Japan, Korea, Southeast Asia, and India.
Euan, can you kick off? And I know you guys met in Singapore, but when and how did this all happen?
We had a mutual friend called Rob Kenny, and he mentioned to me one day that this guy, Charlie Maynard, was moving down to Singapore. And Charlie had a new job within the same company, Jardine Matheson. Charlie arrived in Singapore, and the first time I met him, I thought he seemed like a decent, solid. My initial observations were right, that he's quite straightforward and reassuringly direct. And I told him at the time I'd been working for 6 years for an investment banking firm. I'd had this great career, 2 years each in London, New York, and Singapore. But I was interested in doing something a bit more entrepreneurial. And I think Charlie felt the same. He was also interested in pursuing something entrepreneurial. And I said, I think there's scope to set up an M&A boutique. I think there's a space in the market. And somewhat to my shock, Charlie said, I think it's a good idea. Why don't I buy some bacon and eggs and I'll come over to your apartment on Saturday and we can sit down and start writing a business plan. We kind of accidentally fell into business together.
Charlie, how did you go from the bacon and eggs business plan to really, when was like the first client? How long did it take to really kind of get started up?
The business plan was useful because basically I think we wrote it and said, look, you send it to 10 people, I'll send it to 10 people, and ask them to be as rude about it as possible. And they were pretty rude. But that was helpful just in terms of the feedback loop and improving things. And the other thing is neither of us were American, and Euan made a brilliant call, which is we need to get ourselves to the States because they don't really care where you come from. They'll give you an opportunity. Brand name is much less important than it is in Europe or in Asia. And that worked. We also tried that line on the immigration service, applied for visas, and they bought it too. So we said we're uniquely qualified for H-1B visas because if we don't come, we won't be able to employ anybody. So we got visas, and then when we got visas, we're like, oh my God, we're going to have to resign from our jobs, which I did with tears in my eyes and a shaking voice, and it was completely terrifying. Fortunately, Euan followed through and did the same.
Early 20s, had a great job. You were sent over to Asia with a reputable company. And I mean, what was kind of going through your mind in starting this?
If all went to pot, I'd have lost all the money I had in the world, which wasn't very much. It would have probably taken 18 months to 2 years to fall apart. And I could probably have found another job somewhere somehow. The risk wasn't that high, and so we went with it, and we got ourselves on a plane, and arrived in New York. Found a little broom cupboard office, and then tried to find a client. And Euan had a relationship which was a headhunter of all people that allowed us to. They gave us quite a lot of money to help them set up offices in Hong Kong and Singapore. Or was it just Singapore? Maybe just Singapore. That bankrolled us for the first year or so. Meanwhile, we were doing some fun marketing trips around Minneapolis, Chicago, Cleveland, Detroit. This is more or less pre-internet. Staying up.
What was it like pre-internet marketing in the US? You guys coming here, not knowing the landscape too much and just finding business.
The internet did exist, was just getting going. We had AOL, our first email accounts were AOL accounts. And actually, I felt at the time that already business was being democratized quite a lot. Before, at the very beginning of my career, Goldman Sachs had a massive built-in advantage because they had access to information that no member of the public could was basically a massive insider dealing. And even in the very early days of AOL, we could begin to search for things online. But yeah, we used phone books and directories and libraries and hustled our way in. Mid to late 20s isn't a bad time to try and set up a business. We obviously had fewer responsibilities. We didn't have wives or children or anything else. I think a lot of the clients, prospective clients who went to SOAR, they looked at us and they sort of wondered, are these guys for real? And yeah, a couple of them tried us, and we were asking people to hire us, pay us $25,000 a month. We were asking American companies to pay us $25,000 a month for a trial 3 months to go and see if we could find good joint venture partners or acquisition opportunities in Asia. At the time, Wall Street analysts were telling CEOs of Fortune 500 companies, go and find opportunities in emerging markets where GDP growth is high. So in a way, we had a willing audience, actually. People were intrigued, but I think people, obviously, they had to suspend disbelief to write us a check and believe that we could help them get a deal done.
Did you feel that you were underpricing yourselves appropriately, overpricing? Because I'm kind of going through this right now, and it's just I've kind of perennially undervalued myself. And I think a lot of entrepreneurs, when they have an unknown or untested product or service and they have less experience in the market, they don't really know what to price. They just kind of ask a whole bunch of other people, or they just do the wrong thing for a year.
Well, I think very simply, we knew what other banks had charged or did charge for that, and we just said the same number. Steve Weber, bless his cotton socks, CFO at Nalco Chemical Company, which was the biggest water treatment chemical company in the world, he met us with a guy called Steve Landsman, who we also still love. And Steve was like, how bad can it be? For 25 grand, nobody else is walking to our office and offering us, to help us buy businesses in Southeast Asia. If these guys do that, great. And if they don't, we won't pay them more than the first month.
But we had to knock on a lot of doors to persuade many people to write us. But actually, we did get a couple of things right. We correctly addressed the market where there was a real need. We correctly addressed the market where, the great irony of the U.S. remains today that there are more investment bankers running around this market than anywhere else in the world. But Americans value good service, value good advice, and consequently pay the best fees in the world. And so I think we were sort of selling into a market, and a really addressable market. Don't try and underprice yourself, and don't try and, if you try and offer some sort of too much of a bargain, then it probably seems like you're not, taking yourself seriously. So I think we had the bravado to tough it out and put on a suit and a tie and look people straight in the face and say, we are worth $75,000 of your money.
Yeah, that's really interesting. I think especially for entrepreneurship, just like knowing your value and being confident in it. So that's like the late 90s, but what was kind of like the next chapter of BDA?
I would probably name 2006, 2007, when we saw what was happening in Asia in terms of the development of private equity. And we said, if you're in M&A, you want to, everybody knows this already, you want to be on the sell side. And so being on the buy side for big multinationals was fine in that it would give us great knowledge of various parts of the market as we went around helping them find businesses to buy. But that's not good enough. You want to be on the sell side because that's where the probabilities are in your favor. In 2000 we gotten ourselves to China and set up an office in Shanghai. In 2002 we set up offices in Japan and Korea, and India came very soon after that. And by the time we'd done that, we could really validly say we're covering the key economies of Asia, and having that network effect of be able to be agnostic. It's not just about China. We are covering all of Asia, plus the US and Europe. That was a very, very powerful message, and that really gave us a great setup to be able to do a sell side business and be able to say, if you're selling a business and you want to reach global buyers, think of us.
We wanted to get a third partner because Charlie and I were traveling back and forth from the US to Asia, and it was just becoming ridiculous, the long distance travel. And I said, let's not get someone who went to Oxford or Cambridge or worked for Schroders or Jardine. Whoever we pick should be someone different from us. And Charlie said, yeah, you're right, but there is this one guy, Andrew Huntley, who's clever. So we went into business with Andrew. We persuaded Andrew to join us, and then we hired this young, quirky, ambitious young man called Paul DiGiacomo, who now is one of the four partner, senior managing directors, kind of the core management team with us today. I think that was really important. There's one other point I'll make, which is a testament to Charlie, not to me. I thought that we were in a people business and a business where it required selling skills and hustle and sales, just ability to engage with potential clients and persuade them to hire us. Actually, there's a lot of, as you start building cost and shape and structure to the organization, data is really important. And Charlie started to do, just huge amounts of analysis all the time as to where which markets were promising, what the size of the M&A market was in each country, really, and what sorts of clients we ought to be chasing, and what sorts of fee return we were getting from chasing different types of clients. And I think Charlie was quick to understand that actually, we were building a complex system. And today we still wrestle all the time with precisely what services should we offer. And we've really learned a lot just from carefully analyzing what we're doing, what we've done in the last couple of years, but also what we can find about the broader market around us and the market we operate in. I'm going to add one other thing, which was we have been helped a lot through the years by tying ourselves in partnerships with very good quality Western investment banking firms. Initially Western, finally in the last 10 years we've been partnered with William Blair, which is a very high quality Chicago investment banking firm, and that's been a great partner for us in many different respects. Number one, just by being associated with them helps our reputation. Number two, we get to see what they do well and mimic that. We learn from William Blair in the most developed markets in the world, which is the US and Europe, and we try to apply those skills to Asia. They brought us capital as well, and we've been able to send our analysts and associates on the William Blair training programs, which is massively valuable for us. So having some sort of alliance with a good quality partner has been incredible. And then more recently, we've tied up with Development Bank of Japan, DBJ, which is a very blue chip Japanese government financial institution, who have given us really excellent access into that market.
When you look back at the 24 years of running the firm, how do you think about the difference between management and leadership, and maybe how you have evolved as both?
I think if you're trying to be a good manager, you should try to be a good leader, and trying to set a good example about how you work and how you behave, giving authority to people, delegating, trusting people. Those are things we all try very hard to do, and hopefully we succeed, most of the time.
Was delegating easy for you?
You hire people you trust, and you stay close, and you talk a lot, and you email a lot.
Charlie and I are quite different, and we've had at times a tempestuous relationship. Sometimes when business is going well, we get along like a house on fire. When things are going less well, we tend to challenge each other and niggle each other. For me, leadership and management have been actually quite central to that, has been the way that we've tried to provoke each other in positive ways. And I think generally we have a common ethos about trying to protect our junior staff. Charlie's quite strong moral sense of what's right and wrong and what's the right thing to do has been very helpful to our firm. He's been the conscience of BDA. And sometimes that drives me crazy because I want to take a bit more risk and overpromise because, I want to hustle our way into something which I think we could maybe, fake our way into. And Charlie keeps me from doing anything stupid sometimes. But it has been really important that we've taken care of our employees. It doesn't always work out great. Not everybody is by definition, not everyone we employ is going to work for BDA for their whole careers. But we try to be respectful to people before they get hired, during the time they're hired, and after they leave us for whatever reason. And I think that's that cultural quality has been quite important to the success of our firm, because I think clients see it as well. And I think if you develop habits like that, you inculcate that behavior in your co-workers, and it generally resonates through everything that we do. I'm not saying we're perfect, or we've never made mistakes, or we've never behave rashly. All of those things we have done, but by trying to sort of keep an eye on each other, try to imbue the business with positive, good qualities, and that's not that's kind of enlightened self-interest. That's nothing that doesn't reduce your capitalist incentive to make money. You turn down business when it's not in the long-term interest of the firm. Even if there's money to be made in the short term. So we try to do the right thing. That's at the center of how we try to run the firm.
It's interesting, this dynamic of when you're getting started and, before you've quote unquote made it, you want to take on any business. It's $1,000. Yes, of course, that helps out pay the bills. But then realizing that there is that trade-off, like you guys spent 12 months to get the first big client, but it was at a price and scope that you wanted. It's just interesting, that delicate balance as an entrepreneur of taking any business to pay bills and get traction versus having the discipline to wait out for larger projects where you can focus on fewer things.
I have very, very fond memories of starting the business with Euan and Andy and Paul and Jeff and Mark and Jeffrey and Howard and everybody else. So that's great. But the future is much more exciting in terms of what we started out doing and what we are planning on doing are just night and day.
What does the next couple of years look like for BDA?
We've just got a fantastic position. Nobody is as focused in our market as we are, and having a team that has been together and knows each other and trusts each other and works well together, and is focused on those sectors and focused on the product of M&A that we're focused on is really unusual. And frankly, it's really hard to do because many of our competitors, different offices don't talk to each other, and that's just not the case in our firm. And therefore, being able to serve our clients with something which is really global and really local is in many of our markets a very unusual offering, and that means we can win pretty frequently against some pretty strong competition on ever increasingly large mandates. And so we're pushing up our average enterprise value north of $100 million, and there's plenty of things in the 500 to $1 billion that we're working on, and that is that's exciting. And Asia's growing all the time. Yes, COVID's a pain, but largely the Asian markets have been treated relatively lightly compared to the European and American markets, and there's huge amounts of business to be done, and aiming high and going for that is absolutely our ambition now and and going forward, and continuing to raise that game.
How would you kind of characterize where we're at right now in the Asian M&A market?
You and I and others often look at kind of the progression of private equity in the US, and then how that hit Europe in really the 90s, and how that's hit Asia over the last 10 plus years, and the scale of funds being raised and the number of funds there are, and how that's multiplying, and how places like Japan, who really never accepted private equity, are selling, the likes of Hitachi and Panasonic are selling businesses to major private equity firms left, right, and center. And if they do it, then that's going to trickle down to all the others, and we're seeing it every day grow. And that scale of opportunity is huge.
Spent my whole career waiting for the coming Asian M&A boom, and I still make that joke today. It feels like we're almost there today, but obviously the pandemic is a fascinating experience. In our business, you're full at one end and you're lucky at the other. People don't give you credit often for being in the right place at the right time. They call you lucky. We had the Asian financial crisis, still called the IMF crisis by the Koreans, but the Thai baht devalued, and there was an Asian financial crisis. Really, the year that we set up our BDA, which certainly made my friends laugh a lot about going into Asian M&A as the Asian markets collapsed. 10 years later, everybody wanted to be in China, and we were in the right place. Now the pandemic is definitely hard, although somehow, oddly, we're having, I would say, a better year than last year. And we are very consciously and deliberately trying to find ways to gain market share during the pandemic. Again, there's nothing wrong with being ruthless in a business sense, I think, to the extent that some of our competitors are struggling, and we can selectively hire great people and take, get the attention of their clients. We're doing that. So Charlie's right. Private equity is at an early stage in its development in Asia, but it's big. And we have the biggest private equity firms in the world: Bain, Carlyle, Warburg Pincus, TPG. All of those guys have big Asia funds now. They have also, spawned new, high-quality, pretty big Asian spin-offs. Firms like MBK in Korea, BAG in Hong Kong. So the bearing in across Asia. There are some very, very high quality and big Asian private equity firms now, and we're carefully and deliberately telling them we can give them the best quality advice to help them sell businesses up to $1 billion. We track very carefully what every private equity firm has bought in Asia, and we are thinking very hard in each of our sectors about which of those assets we would like to sell, which that we think we could sell well and be paid well for selling them. And our goal and ambition, you asked where we might be in a few years' time. We'd like to do 30 deals a year, and the kind of operational leverage in our business is huge as a result of that. We have, as Charlie said, a good reputation. People know us, clients hire us. At least if you, it's a guy on the street's never heard of BDA, but if you're a private equity guy in Asia of any scale at all, you know very well who BDA is. So we have that scope, I think, now to not only ride the industry upwards, but to do bigger and better deals than we do today, and grow faster than the industry.
Give the highlights about maybe some opportunities and challenges in each of the key Asian markets. So starting with Japan.
Well, look, I mean, Japan. I'll go quickly. I mean, Japan is what I've already mentioned, which is the disaggregation of conglomerates and the increasing acceptance of M&A as a corporate tool, with large groups beginning to sell more and more businesses in order to focus on the key parts of their business. and private equity and international buyers and domestic buyers being key counterparties to that. In Korea, which is often overlooked by many competitors, we have a fantastic team that's done a great job of developing that market. There are obviously top tier and mid tier chaebol, often family controlled as opposed to third party management controlled. That allows decision making to be very quick, and they have also, if anything, maybe faster than Japan, decided to focus on their key businesses. So they were national champions, and they're now, many of them, seeking to be global champions, but you can't be a global champion at everything. So picking your winners and exiting the ones that won't be winners. China is, at least in some sectors, rather out of fashion at the moment. I mean, people need to remember just how excited people were between, let's say, 2005 and 2012. I think at the moment, while it's a little bit out of favor, it's the second biggest economy in the world. It's growing at, pick a number, on average, 6% or so. That's a fantastic position to, fantastic country to be in, a fantastic market to develop. As founders of businesses who started businesses in the 90s or the 80s or the 2000s, exit out of the businesses and their single children don't want the business in many cases, M&A really starts to become a key corporate tool.
Before we kind of move on from China, you've been there for over 20 years. You've seen the ups and downs in the economy as well as trends with M&A cross-border. With what we are experiencing now, would you characterize it as short-term or systemic? How should people think about responding to this right now?
I think you need to look past the politics quite a bit. So I think the fundamental economic situation in China is very, very strong. And will continue to be very, very strong. And I think people need to be working on that basis and position themselves on that basis over the next 5, 10, 20, 50 years. So I think an exit from China, I would be fixing it rather than exiting it. It would be my recommendation. Singapore is obviously benefiting from Hong Kong's troubles. Has got a great private equity community, the natural center for Southeast Asia. We've got a particular standout in Vietnam, which is super hot right now. We're one of the few advisors who have got an office on the ground in Vietnam, and I spoke to the number 2 in the office this morning, and they're going gangbusters, both in terms of M&A and in terms of capital raise. So that's just very, very exciting. And India as well, we have not been particularly strong historically on tech and healthcare, and that's something that we fixed. And there's huge opportunities in that, and also in the other sectors that we work on. And Kumar's done a great job of running that business. So,
with cross-border M&A right now focused on India, is this more relevant now given the China dynamic? Or is it kind of historically similar to what you've seen for trends?
The Indian consumer is coming to be a meaningful feature of the market for the first time. And we think health, tech, and consumer are extremely well placed in India today. We were right to be cautious about India for many years. And we'll see how quickly it comes to life now. But we're seeing a lot of evidence of serious private equity investment into the market.
Either individually or as a company, what is your favorite deal that you worked on? One, and the second thing is, what are you most hopeful about?
My favorite deal is the one I signed yesterday because it still feels good, which was a rather complicated sale by a US multinational to an Indian multinational of a controlling stake in a hybrid US-Indian multinational in the health sector. Very complicated to manage the interests and relationships of a pretty demanding buyer, pretty demanding seller, and a pretty demanding founding family. Complicated, involved really difficult negotiations to balance everybody's risks and interests. and we're getting paid fairly well for doing it. So that's been great fun. And every deal I ever do, I think surely they're going to be easier in the future. They almost are never easy. Once in a blue moon, one falls into your lap and transacts itself. But generally, they require they add to the number of grey hairs on the side of my head meaningfully. But if by God, it feels good when you get them done.
They all cause a lot of pain on the whole. So the ones I look back on are normally the ones which I died 3 times and took too much time just because it was just so much blood, sweat, tears, and toil. So I'm not going to call out one because they're not really my favourites. The ones that remember the most, they're just damn hard work. I think the second part of your question was, what are we going for? Focus on what we do, and scale. One of my less favourite politicians, Boris Johnson, is saying build, 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 and that's what I feel about BDA. Build, build, build.
Well, guys, this has been awesome. I really appreciate the time with this, and thank you for giving me the opportunity to interview you both, and also for truly changing my life, and give me a shot at going from English teacher to banker.
You've come a long way from the young man I met, and it's good to know that you prove there's life after BDA as well. So,
Thanks, guys, so much for the time.
Very good to see you, and thank you.
Thank you.